Next, we focus on tokenization and the trends and opportunities in the financial sector. And that particular discussion will be given by Chirayu Gandha. Hope I've said that correctly, who's associate partner at McKinsey and Company in Johannesburg, as well as Matthew Higginson, partner at McKinsey and Company over in Boston. So, gentlemen, the stage is yours.
Welcome, everybody. We'll try this one again. Thank you for joining this session. By the way, I feel totally inspired, particularly by John Kamara's passion for what's going on. I hope in the next few minutes we'll be able to talk a little bit about this kind of building and owning, a real opportunity for Africa to take the lead on this. Quick introduction. My name is Matt Higginson. I'm a partner at McKinsey's Boston office. I'll talk more about what we do in a moment, but we also pass to my colleague, Chirayu.
Hello, everyone. I'm Chirayu Gandhi. I'm based out of Johannesburg. I focus a lot of my work in the Web3 space and building digital businesses in the financial sector. Happy to be here. I think today what we are talk broadly about tokenization. So we have been talking about stable coins and different use cases, but we want to take a broader angle at what tokenization actually means and what are the different use cases that can be applicable in the financial sector. So we'll take a broad view based on our global experience, and then we'll share more about it. But before getting started, just a glance on Web3, how the Web3 space have performed in 2022. As we all know, we are in the winter phase currently, but still the adoption has kept on increasing, not just in Africa, but across the globe. So if you can see, almost 2 billion of daily volume have gone through decentralized exchanges, right? Per day. That's massive. There is almost $40+ billion of NFT transactions that have happened in 2022, despite of all the negative news, negative correlation associated with NFTs. The stablecoin transactions, we are having a lot of discussion about payments and stablecoin. $8 trillion+ have been settled on through stablecoins, and this is like on-chain data, right? Just to show the comparison, Visa settles $12 trillion a year. So I think it's quite close. We are catching up to Visas and Mastercards of the world. The VC and the PE funding is also has increased a bit last year, right? So VC, in spite of all the boom and the burst we have seen in the fintech space, $20+ billion have flown into this Web3 market, right, in terms of investment. And in Africa alone, we have seen more than $150 million of investment that have come into Africa, primarily in Nigeria and South Africa. So there's a lot of startup adoption that's happening, and 50+ companies have been registered in last 2 years, whose entire focus is building products in the Web3 space. And finally, like month-on-month developer activity has been also increased by 5%, right, in spite of all the market scenarios we are going through. So I think that's an overview on the market, but let's deep dive into tokenization broadly and how it impacts the financial sector.
Perfect. Thanks, Chirayu. You still hear me okay? Yeah. Just going back to this theme about building and owning, that last statistic is actually pretty significant, right? If you're passionate about this space, we've had an extended period of time when the overall market cap for digital assets has been down, and yet the number of developers is going up. And the opportunity we're going to talk about in tokenization and financial services is hundreds of trillions of dollars in potential. And it's a potential that's being penetrated less than a fraction of 1% so far. So if you want a place to go play and actually find value, it's a pretty good space. It's a good space because we haven't yet landed on the platform, the venue, the standard for doing it. So if we really want to take a lead, this could be a good place to look. So let's start a little bit by talking about the demand side. Let's see if I can get this to advance. It'll come on in a second. One of the things that's important about tokenization is to really understand, is there demand, is there interest in the investor community today to actually engage with this? We've got on the screen some data, actually it's a select survey from just October this last year that was done for Bank of New York. And they asked nearly 300 institutional investors, would you be excited? Do you think tokenization has a role? And you can see it's nearly unanimous in the belief that tokenization will revolutionize institutional investing. Secondarily, nearly 90% were comfortable with this idea of tokenized cash. So I can settle institutional investments using on-chain cash, stablecoins. And I feel good doing that, and I could actually hold hybrid accounts with cash and tokenized cash along with my assets. And thirdly, this last piece is most important, because if you're going to invest, you're going to want to see some return on that. And the reality is that more than 2/3 of the respondents said, I will pay extra for tokenization to deliver new value to the industry. I will pay extra for things like faster settlement time, better auditing, more transparent data, and frankly, a better way to conduct business if the technology can scale. All right, so what is tokenization? Let's talk about what this really means. It is a digital twin for existing assets. As we'll see on the next slide, there are 5 parts of it, 2 of which are going to feel very familiar. So the first 2 are going to feel very familiar in this industry, which is, first of all, can I identify, select the actual asset I want to tokenize? And let's take something that is quite familiar today, which is commercial real estate. Can I identify the title owner for an office building? Secondarily, somebody needs to go in and verify that and some governance and structure around what we're going to tokenize. Those are 2 things that are done routinely today. With digital asset tokenization, we then say, okay, can we now issue a token that represents that asset? After issuing it, can I actually go and take it to a trading venue and get people to trade it and create liquidity? And then finally, can I store that somewhere securely, and can I report out my ownership? If I can do that, I can cut out a bunch of complexity and steps that are already in the process today. I can simplify, I can reduce cost, and I can potentially open up to new investors. So we've got an opportunity for revenue and a possibility of reducing cost. Okay, so let's actually think through then, more importantly, what are the benefits of doing this? Because just because you can do this doesn't mean to say you're going to or you should. But there are material benefits to the industry that will attract talent, that will attract investment into this particular process. The 3 things on the left really stand out most of all, which is, first of all, if I can tokenize something, it keeps moving around. If I can tokenize something, then I can actually fractionalize that token. If I can tokenize an office building, I can sell 1 floor in that building. And if I can then fractionalize that asset, I can now make it more affordable. If I make it more affordable, I have a bigger audience, and that audience brings more investment, which is liquidity. Liquidity begets liquidity. It's actually really good for the industry. So big illiquid investments become tradable. If we can just go on 1 slide, we seem to be stuck on this. So those are 2 things. We've gone on 2 slides. Go back 1. Perfect. And those 2 things bring about some cost savings. Because ultimately what we're not doing is paying some sort of intermediary to do the holding of the asset, the trading of the asset, the verification of the asset for us. This can all be done on chain. In addition, we have a few benefits around things like the embedding of compliance and trading standards. Tokens can carry rule sets with them to determine who can trade and where they can be traded. We can also find a way of doing real-time valuation. So now we can find out what this office building is worth in real time because we've got people trading fractions of that token. And of course, this piece around record keeping, which is the audit trail that exists on chain, is a perfect audit trail. So revenue benefits and some cost savings start to get interesting for the industry. All right, let's go forward one more. So what can get tokenized? Well, the short answer is a lot of things. But for financial services, a few things have started to come to the surface and actually be tokenized in the real world that we can go invest and buy today. The first block are the traditional financial assets. This is things like trading equity shares in companies. I can go trade tokenized Tesla stock today. Actually, not sure why I would do that, but I could. Secondarily, and more commonly, I can go invest in bonds, corporate debt. I can issue bonds and I can trade in those. The big manufacturing giant Siemens just issued a bond. The city of Lugano, we'll talk about this in a moment, issued a bond for the city. These are things you can go and invest today with real price efficiency in doing so. And then the third one under the traditional assets is perhaps the most common, and that is tokenized cash. Chirayu mentioned that today we probably have $150 billion on chain. You can see up to $100 billion traded in 24 hours. The flow of tokenized cash is real. It's really being used. The other block are these alternative assets. Some are going to look quite familiar. So things like tokenized real estate, infrastructure funds, ways of getting investment into a city or a municipality to go build stuff. This is happening. We have private equity, so funds, where you can tokenize a fund, open them up to investors, and things like commodities, so we can tokenize gold. We can even tokenize gold in the ground, and we can trade it without it being extracted. We can tokenize futures. That's pretty cool. The other selection down the bottom are more intangible. So things like intellectual property, copyright, patents, ideas. We can tokenize an idea, and a startup can go raise against that in capital markets today. So I can take a brilliant idea, and I can find investors, and I can use this. I can use tokenization of my idea. All right, what is all this worth? Why am I standing here today saying this is an opportunity? When we look at that top class of assets on the next slide, what we find is that already the total market cap is around $300 trillion today. And yet, if you look on the right-hand side of this, a tiny fraction has been tokenized. Some, but a tiny fraction. The biggest, by the way, is in cash, about 1% of cash. When we look to the alternative assets, like real estate, it's even bigger. Like $500 trillion out there that could be tokenized. And I can tell you that the technology, the process to do this already exists and is already being used today. And the only thing holding us back really is how do you scale and get to adoption and trust in this? And we'll come to those challenges. So this is a big opportunity. It's real, it's being implemented, and it's still in the early days. So let's look at just 3 examples to bring this to life, to show you that this is real. The first is a bond issued just a few weeks ago by the city of Lugano in Switzerland. And they issued this bond. It was only 100 million Swiss francs, which by typical bond standards is small. But they found 20 institutional investors who purchased fractions of this bond through the Swiss Digital Asset Exchange. And more importantly, the Swiss National Bank now accepts those tokens as collateral for repos, like as true collateral in the financial services system. It's real. They recognize this. This is a AAA rated bond issued on a blockchain. The second example is from JP Morgan. JP Morgan have issued basically tokenized bank liabilities and assets, or tokenized cash, to allow their members to basically transact between them, B2B, using JP Morgan coin. And you can see here, over $300 billion of transactions already, solving real pain points in business-to-business payments, cross-border payments, even the creation of fresh liquidity in capital markets. Both of those have been issued on private blockchains. And I might argue that this idea of parachains we heard earlier from Polkadot might be a path forward. These sort of segregated chains where we can use them for dedicated purposes. The exception to that is what KKR did, which is, so KKR have issued a fraction of their fund, their healthcare fund, on the Avalanche public permissionless chain. It's a bold move. Because if I'm a financial institution, I'm much more likely today to either participate or be required to participate in a private blockchain solution. But they still issued on Avalanche, and essentially what they've done is they have tokenized the interest in their fund and enabled much lower ticket sizes. So much smaller investors can now get into their healthcare fund. They've opened up the aperture to investors and found new liquidity. That is a path forward. Now, why would you do this? Why would you do this? A couple of reasons. One is definitely on the revenue line. The other is on the cost-saving line. If we flip ahead to the next slide, what we'll see is that this process, although more efficient, does attract fees. And if you can be the preferred venue for trading, or you can issue the asset yourself, issue the bond, you can attract fees from issuance, from custody of the asset, from listing of the asset, and ultimately from providing services like reporting. So I would argue that not just issuing bonds, but being engaged in this whole value chain is where the future value is going to lie. And in addition to revenue, there are certainly going to be some material cost saves. And you can see some of these listed out around things like the automation of this process and the ability to settle in real time instantly. And the hope is that the combination of these improved revenues and frankly a broader investor base and the reduction in cost is sufficiently attractive to the industry for this to begin to scale. And let me give you an example of that scaling that's already happened. So on the next slide, we're going to show some examples of tokenized cash. So this is basically USDT, Tether, and USDC, and Binance Dollar. These are the tokenized dollars issued on multiple public permissionless chains. And I think this is a helpful model. Because if you look at the scaling that happened from 2020 to 2022, the volume of tokenized cash grew 10x. Because we found a use case. We found that actually having tokenized cash on chain allows us to do instant settlement. It provides a safe harbor. It potentially even reduces the friction in cross-border payments. It's a real use case with revenue and cost-saving opportunities. And I think that this can provide a template for how the rest of tokenization can go once you open up the markets and you start to see the early experiments working. And if those experiments are by a big private equity fund, a big bank, a city, you start to have some credibility this thing is going to be real. Now, it's real, but it still faces challenges. Let me cover a couple of things and I'll hand to Chirayu to talk about where we see this evolving in Africa. But there are really 4 big challenges that remain today. And these are challenges that, if solved, present real opportunities for the innovators and entrepreneurs out there. The first is that we haven't yet got to this consolidated offering. There is no single venue for digital asset token trading. There is no single chain for this. And if somebody can start to scale a venue and a chain, you will get liquidity onto that chain. The second is that the infrastructure itself, and frankly, the industry around it is still immature. That's why we're all here, right? To solve and watch this industry mature. And I think particularly the fragmentation of chains and the need for interoperability will start to address that, but we need to see that evolve. And then thirdly, the piece around liquidity, that unless we start to see a coalescence of particularly venues, it's going to be hard to get real liquidity. But perhaps the one remaining inconsistency that we really do need to figure out is this piece on regulation. If I just flip to the next page and just say, look, we've been on a journey. We've all seen this. From the early days of regulation, when it was really just, how do I define this stuff? What is a digital asset? And how do I find the bad actors and the bad apples? We've started to go on a journey now the last couple of years that says, yeah, maybe we can put some licensing and regulation in place. Maybe we can help the industry mature, and maybe we can start to provide clarity. My personal hope is that over the next 2 to 3 years, and frankly, Africa has a major part to play in this, in regulatory arbitrage, is that we will take a step forward in clarifying and classifying the assets themselves. We'll put some rules around how they're traded so they can be done in a trusted and grown-up way. And frankly, we'll get to the point where there is clear accounting and taxation rules that give institutional investors confidence that this is real and I can do it safely. I'm optimistic on this. I'm also cognizant that there's real work to be done. And with that, what do you talk about a local context?
I think we spoke about regulatory restrictions, right? I think that's going to be the biggest unlock, not just for Africa, but globally. Now, if we bring an African perspective to this, right? Africa is quite vast and it's quite fragmented. If you go to the northern part of Africa, you see right out bans, right? Egypt, Morocco, etc. They've banned the use of cryptocurrencies or anything related to digital assets. They bucket everything as cryptocurrency, and if you deal with it, you go to jail or you make pay like heavy penalties, right? So if you go to the northern Africa, it's completely banned over there and it's very strict. If you go to West Africa, western part of Africa, they tried hard to prevent the population from using cryptocurrencies, but they failed, right? So they tried to put holes on the bank accounts that deals with anything related to digital assets, cryptocurrencies, etc. They tried hard to cripple the movement, but I think there's a big bottoms-up demand from the masses, and like they are changing their stance now, slowly beginning to open up. And when we come to the southern part of Africa, it's getting a bit positive, right? You look at South Africa, you look at Mauritius, there are some guidelines defined, but at least they have not banned the use of cryptocurrencies, digital assets, or blockchain technology. But on the other end, the governments are piloting, right? The SARB, the Reserve Bank, has completed 2 phases of KOKA project in South Africa, and they are moving forward in this space of tokenization, right? So Africa is divided when it comes to regulation, but despite of that, what we have seen, that there's a big demand from the population. The general population in Africa is very young, right? Like the average is less than 20 years old, right? People are tech savvy. This population is tech savvy. They want to participate in global scene, right? They want to participate, invest money where people in Silicon Valley, people from India, people from London are participating. They want to be recognized as a global citizen, and they are participating in this movement, right? So there's a lot of bottom-up demand. And if you can see, even though Egypt, right, it's banned, outrightly banned in Egypt, we have seen there is $40 billion that have come into the country through cryptocurrencies. Could be stable coins, Bitcoin, Ethereum, whatever it is, but it has come to the country. Even in Morocco, close to 25 billion has come into the country through cryptocurrencies. And this is just inbound volume. But if we look at the total trading volume in Africa, it's north of 500 billion. Despite of all these bans, right, in West Africa, in Nigeria, we have 20% of the population has some access to cryptocurrency and are trading through P2P, right? It's that massive over there, in spite of all the bans. So what we are seeing in Africa, because of the young demographics, we are seeing a lot of bottom-up demand, and the regulators are taking notice to it and trying to are cognizantly trying to make some moves in the space. So I'm being hopeful that over the next 2-3 years, we will see a movement in this space, either positive or negative, but regulators will start taking it seriously. I think finally, to wrap it up, just want to showcase some of the examples, some of the progress that we are making in the tokenization space. We are very nascent, right? Like not many use cases are adopted at a wider scale, but still there are some movements that are happening in this space, and we have some use cases for it. The first use case, right? In Africa, there's a big credit gap, funding gap in the SME segment. It is estimated close to $450 billion is the funding gap in the SME sector because they are not catered by banks and like it's difficult to credit score them and invest in them, right? I think there is an opportunity here that we tokenize that so that broader market can participate. Even individuals like us, if we want to invest through fractions in SMEs, through security tokens, we can now do that, right? So there is some movement happening in this space. A few startups are working in this space, and World Economic Forum has also like recognized this in 2021 that there is movement happening in this space across Middle East and Africa. And I think this can deliver a big opportunity. Still very small. A lot of work needs to happen over here, but at least it's moving forward. There is some people who are taking initiative to solve this SME funding gap in Africa through tokenization. The second, which we all of us might be aware of, is the Reserve Bank of South Africa. They have conducted 2 phases of COCA project. The first phase was they launched wholesale CBDC and they developed this interbank settlement through wholesale CBDC, right? So major banks participated in it. It was successful and the project was successful. We still are looking forward to the timelines of rolling it out to scale the adoption, but the pilot was successful. They also carried out a second pilot where they tokenized the debentures, the debt, the debt portfolio, a little bit of it, and launched it on a blockchain. Right, so they have also in the middle of piloting that, and they have seen good success of it. Right, so now you can use the wholesale CBDC to even settle the debenture that they have launched on DLT. Right, so they are trying to make effort to see how you can leverage the benefits of tokenization and blockchain and make it applicable in the financial space. Even in Mauritius, we are seeing some progress. I think tomorrow we have a session focused on Mauritius as well, but we are seeing progress in Mauritius as well. And finally, Central Africa Republic, right? A very small country, a very small GDP, but they have taken a bold move, right? They have made Bitcoin as legal tender. This only the second country in the world to do that. And they are tokenizing the natural resources because they have a lot of natural resources which they are not able to capitalize on, right? So they are tokenizing them, putting them on blockchain so that the global community can start participating and start investing in the country. They're also changing a lot of regulation, taxation, immigration policies to welcome people from over the globe to participate in trading the natural resources, right? So it's a good move, right? Because now you can mobilize the funds globally, and you can market your natural resources. So these are some of the examples that we are seeing specifically in Africa, but still it's very small, very nascent, right? Like over the globe, it's very small. But in Africa, like we talked about the inertia, African inertia, right? So that's maybe holding us back. But we feel like tokenization can solve a lot of real life problem for the funding gap, tokenization of minerals. We are so mineral rich country, right? So we can use all this, or we can develop these use cases on blockchain and try to solve this problem. I think that's...
So maybe, Troy, can I just pull a few threads together here? Because we've covered a lot, but I want to go back to some of those central tenets. So the first thing is that this industry of tokenization, whilst it's real, is very early. And again, going back to John's comment about how do we build and own stuff ourselves, it's early enough to play a material role. The second thing is the opportunity is massive. And because we've demonstrated it works already, that massive opportunity is within reach. This is not a dream, and we've started to see it with things like stablecoins already. And then the third thing around regulation, is that there are countries and regions today that are already starting to get ahead on this. So we have a big office in Singapore that's doing work with the Singapore authorities. We have an office in the Middle East that's doing work in the Middle East on this topic. They are playing an arbitrage game, and they're already welcoming tokenization and the technology. And so getting ahead of that is going to be very helpful. So this combination of identifying this as a real opportunity, moving quickly because it's so big, and taking the lead in setting up the technology and the venues will give Africa the opportunity to build and own a solution for itself. Thanks very much.
Thank you everyone. And